With all eyes glued to the magnificent 7 megatech stocks, GE and IBM, formerly the bluest of blue chips, are sneaking back up the charts, shaking off a decade's worth of rust. Back at the dawn of the 2000s, GE and IBM were still occupying top spots on Forbes's rankings of the largest companies on the planet. General Electric, an original Dow member in 1896, was a strong diversified conglomerate expanding through the dotcom craze, gobbling up businesses ranging from NBC to Kidder Peabody. By the time its iconic longtime chief executive Jack Welch retired in 2001, its market cap had reached more than $600 billion. International Business Machines, a bit of a latecomer to the index in 1932, was America's most valuable corporation through much of the 1970s and 80s. During the 1970s and 80s, its market cap ranged from $22.35 billion in September of 1974 to $105.9 billion in August of 1987, 2 months ahead of the Black Monday stock market crash. However, these giants of the 20th century ran into trouble in the new millennium. General Electric's massive, highly leveraged GE capital, including a large portfolio of subprime loans, was brought to its knees during the financial crisis and eventually dismantled and sold off. Moreover, a new generation of technology companies soon outpaced these blue chips in a host of markets, including cloud computing. Now, more than 2 decades from their peak years, GE and IBM are crafting their own comeback tales. Booted from the Dow in 2018 after a marathon 111-year run, GE is flirting with its highest post-financial crisis stock price, eager to leave a 7-year slump in the dust. IBM is on a similar trajectory, creeping up on a stock peak it last saw over a decade ago. In the rough patch from 2016 to 2018, GE's shares took a 75% nosedive, and IBM wasn't faring much better, with a 32% drop, all while the Dow ticked up by 18%. Fast forward, and the tables have turned. GE's value has tripled since 2018, and IBM's has surged 82%, both outstripping the Dow's 67% increase. Are these two dinosaurs of the Dow seeing a fleeting resurgence, or are they beginning a steady ascent back to prominence? The boost in GE and IBM stock prices isn't as straightforward as their financials suggest. Sure, more robust bottom lines paint a pretty picture and could easily explain their surging shares. Yet, the reality is more nuanced. GE, for instance, reported a $799 million loss in 2022 but bounced back with a $10.2 billion profit in 2023, a hefty chunk of which came from the $5.6 billion windfall from spinning off its healthcare unit. IBM had its own struggles, absorbing a $5.9 billion blow in 2022 to shed $16 billion in pension liabilities to Met Life and Prudential. Yet, by 2023, its profits had climbed by nearly $2 billion on a GAAP basis.